YieldMax, how I doubled my portfolio. Yeah, I'm about to hit the $1 million milestone. It's wild. High yield, hoorah. For me to properly tell the story, I need to take you back. No spreadsheets, nothing but real money. There was a time. This was all the way back in 2025, July. My portfolio, well, yeah, back last July I had NVTS when it was $8. Now you all try to buy it at 28. I had 2,000 shares of Hood. But down here, look, Hui, I was in the high yield community. I had 10,000 shares of Ulti before the split. Stories I interviewed Jay. I was never into reinvesting. I expected my account to grow. Okay? You should not be in an income fund and have to give the income back. Dividends should be a reward, not a punishment. Carrying $500,000 in margin, the poor Oracle. This was worse than the China finger incident. It was back in the day. And I've evolved. I no longer have any YieldMax and stuff. I have select high yield things. I'm still in I love XDTE. It does what I always wanted. You have to learn how to use XDTE. I didn't really want to talk about it in this video. Let's keep it to YieldMax. So they taught me about NAV erosion. They taught me about covered calls inside an ETF, and most of all, they taught me about math and how math doesn't math when it comes to ETFs, but you'll never learn this until you have your personal experience. So I took control. First thing, I'll just share with you for the XDT army out there that started with me in the beginning. The thing with XDTE, it goes up and down with the S&P 500. I'm not going to go into the whole thing right now. Here's what I really like in a fund, okay? I get from this fund, it's sitting there right now, $1,031. I have no margin, but this is what happens to my balance, the P&L. Just want to show you, and then we'll get back to YieldMax and how I doubled the portfolio, okay? So what I learned here from something like XDTE is it all matters when you buy it, really. I don't reinvest. I put $250,000 in here, and it grew to $258,000. And right now, I have sitting there to withdraw this amount. The way I've beaten XDTE is by conquering greed. The arms race of the stupid YouTubers of how much they make every week and every month, all of that's over. You know how I beat XDTE? I no longer oversize. There was a time you seen me with 10,000 shares of Ulti. There was a time I had 30,000 shares or 20,000 shares of XDTE, and we went into a downturn. And so when you see all that red instead of green in your portfolio, and you're down $30,000, $40,000, and the market's crashing, well, that's the problem with oversizing. So I got to the point where I put $250,000 in here like I bought a building, okay? The value of the neighborhood is not going down. It's not in the YieldMax neighborhood, and I bought it right. The value is actually increasing in the neighborhood. And every week, it's paying me, even at 16 cents, spit on it if you want, $1,000. I'm happy with that. And you know what I may do if the market turns down? I may go and do core number. I put 250,000 in here now, right? And there's a balance of, 258,000. If it goes to 260,000 and we go up a little more, I'm going to take $10,000 off the top, have my initial 250,000. I'm going to put that 10,000, just leave it in the cash segment until the next war or event or whatever happens. And then I will take that money, okay, when we're down, when my account balance is down to like, we crash, and I'm down, let's say, to 230,000. I'll take that 10,000 and put it back in and buy even more shares cheaper. Just focus on my $250,000 number. Now, why wouldn't I buy back in as soon as we drop to 240 if I took out 10,000? Because I want a better deal, or else I'm not buying back. Genius. Talking about genius and non-genius, we're going to get back to Yield Max, and what I'm going to show you is going to blow your mind. Leo Labamba. Remember him with the anchor system? I'm going to do his Yield Max story. Leo never loses. He lost. Gone. I learned about NAV erosion. I learned about covered call funds. I learned to never ever buy individual funds anymore, no matter how good they look in the moment. Okay? But I've learned to tackle individual stocks. Some of you are out there trading options on the side, doing anything you can to accelerate the velocity of money. And I'm with you. Although I found a better, faster way. Oh, it's wild. So, honestly, Chippy is doing great. But that's the luck of the wind. We call that a whiff of Misty's greatness. Remember back in the day? I don't know if it's different. It might be. I don't want to insult any of your investments. I was in Chippy for a little while. I grabbed some capital gains. I left, and that's what I'm getting to. I'm not married. I used to lose so much money when I went all in on some group of Yield Max funds, and I would get, when it was monthly payouts, the $7 footlong. They pay a $7 dividend. I'd buy 5,000 shares, get 35,000. You know what happened? The fund would erode, and I would be down not 35,000 but 55,000. It's crazy times. So I learned that covered calls are great if you do them yourself, right? Let's say you're trading covered calls and you make, let's pull up what matters, right? That's what you care about. Let's say that you're doing covered calls and you have $100,000. Everyone look at the screen. You have $100,000 and you make $50,000 from trading, okay? Well, then you would have $150,000, but not in ETF math. It doesn't work that way. Now let's take a look at what happened to me when I stopped doing yield maxing, and I learned that, hey, you know what? I could just buy the stock and sell a little bit every month and call it a dividend, because every single time a stock rockets up, these covered calls get blown out. They're all kind of in the same range, right? And I don't know if it's an algorithm or anything. I don't know. These are only my opinions. But if a stock rockets up, all the calls get blown through, and then they got to pay you anyway, even though they lost all the trades. So they give it to you from the NAV. And if you're lucky enough and the stock keeps going up, you stay green. Now, if it starts to slip down and don't recover from that, and then it starts going down a lot. Now, so you can't win by winning. See, if the stock goes up a lot, they're losing their trades, and it's kind of like when they pay you, it's like they slice off a little bit of your portfolio and give it to you. Rock, right? You love it. Anyway, here's what I did. I stopped, okay? I took control, and it took me, I tell you, I stayed at that 500,000 for like a year and a half with all the 10,000 OP and everything, and then this, right? Let's take a look. 1/21/26. This is let's call it June 1st. 6/1. That's 5 months. In 5 months, two dramatic things happened here. Okay? My balance went from 565,000 to 924,000 on Friday afternoon. Okay? Now I like QQQI. Here's the thing. I don't hold these. If it's not going to pay me, it's gone. Now look at HPE. You know how much money this is going to make, HPE? It's just in the after hours it shows that. On my screen right now, if I refresh, it says I'm up 33,000 on HPE. It's aftermarket, it don't count. But look, not only did I double my account, I get dividends and I take them. Last month, I had a $12,000 dividend on QQQI. And by the time the dividend came, I didn't even have the QQQI anymore. You know why? I learned to change my focus. No longer will I buy, hold, and masturbate and pray. No. Look, I focus on my portfolio value. I want it to go up every day. Okay? You know, last week I averaged $33,000 a day. Now I'll show you the wild part. I was like you, okay? I had $600,000 worth of margin back then. in January. Now, margin is not applicable. I have zero margin. Zero. I've gone from a renter to an owner. I look to inspire all of you. Now, you can play with yourself with options and do all that. You know what I do? I do earnings raids. Yeah. Let's go through what I'm holding. QDT, you know what I like to do with QDTE? It's one of the only things that recovers, okay? Because of the way they handle their covered calls. I love it. So if I was a little guy and I was on margin, right, and I had 5,000 shares, when they announce the dividend, when it's reward time, I'd go on margin, I'd make it 10,000 shares. And I get the dividend, and then when I recover, you gotta recover. In this instance, I give it back. This is how I built myself up. I give back the 5,000 that were mine. But then I learned, I watched these jerk-offs. Doing options trading, making it complicated to make money. Like, you know, it takes a lot of research, a lot of work to do options trading. Listen to that idiot retire on dividends, what he does to make $100, okay? It's ridiculous. I want to give you some more, and what I do is something I've been doing from years ago, but without options, with real stock. Right now, again, what's the new paradigm, the mind shift? All that matters is my portfolio balance. I withdraw dividends. I was in USOI. I was making $900 a week until oil was bad, wasn't good anymore. I would buy 10,000 shares at a time, right? And I try to keep it no margin, especially going into the weekend. I don't owe anybody nothing. Woof, I'm on fire today. ODTE, you know? Oh, it covers all the indexes. It's new up-and-comer, small part. GIAX shocks me. I got 10,000 shares. I like it, pays every week. Space is new to me. I've seen it going up a lot. I bought like 2,000 shares, pays every week. I like that, okay? So, but none of these positions, I may have none of them by Wednesday. Again, the velocity of the portfolio balance is all that matters. I'm taking dividends. I was at 700,000 for a long time, right? And I would scrape off top. I made 25,000. I take it off the top. I started saying, self. I'm like, self. Talking to myself in like third person, like a moron. Okay? Anyway. This is amazing. So YieldMax taught me all of this. How not to be a moron anymore. I listened to the morons. And they're all gone now. It's beautiful. They're all gone. You wanted me to give you an example of Pigeon Pay and all the shit you got to go through, and then what I did? Remember Dell had earnings the other day? This guy can't even button the top button, this fucking potato, okay? Don't be a fucking potato. Push yourself away from the table. Now, he's going to tell us how to make money on, Dell is having earnings. He's going to tell us this convoluted bullshit. Listen to this.
Data center category so far here. When we look at our chart more specifically, a sharp push to the...
No offense, Mike, the tactical hot dog scalper. This chart shit and everything don't matter. You know what matters, especially when it comes to earnings? Expectation level. Okay? Expectations. You want them to have low expectations and then the real numbers. Okay? Because if the expectations are too high, you could have the most amazing earnings in the world and you get the NVIDIA effect where the price goes down. So listen to this schmuck, and then I'm going to show you how at the push of a button, I made $30,000. I'm going to show you. Watch. He's doing all this work. He's sweating under the lights in the hot potato suit. Listen.
Upside recently resulted in our all-time highs yesterday of $312.14.
It went up to $426, you fucking potato.
For the most part, our trajectory was this upward channel type shape between our two blue lines here. Notably, we had a gap here as well after this brief sideways consolidation, kind of this bull pennant, bull kept up. That was the subsequent low. So 255 to 264 presents an interesting potential supportive area. We also had a low that was established here, 300 as well. When we think about our moving averages that we follow here,
I didn't fucking think about no moving averages.
Day EMA in dark blue comes in near 286 roughly or so based on yesterday's close. RSI also pretty strong, 78, close to 80, which is regarded as an extreme bullish reading here. You know, RSI, overbought area in a trending market, typically is a sign of strength here. So when we also look at our volume profile study, just focusing on the last 3 months, a bit of a node developing here, suggesting potential support from 300 to 310. But down here as well, a much larger node, 235 to 250, could present a foothold for traders. Notice as well, volume spike, very heavy volume during our gap up that we mentioned.
All right. Walk us through the example trade approach you would take.
Right. So for Dell, we're going to focus on June 18th, 21 days out.
Shut up! Here's what I did. I knew fucking Dell was going to go up, right? So in the middle of the day, I had 2,000 shares on margin. I made $31,000. But you may say Oracle. I don't understand. I don't understand Oracle. Your balance is more than that, right? No shit, Sherlock Holmes. Because that was before earnings. In the daytime, I took the money. Okay, hold on. Is this the one? No, this is the old one. Look, 812. You can see me growing. Okay, 851 is the Dell trade right there, right? I was like, dude, you got a Dell, right? So I sold it, 2,000 shares, and then I bought in the aftermarket. It knocked me to the moon. And now I'm here. Now there's some earnings coming up this week I'm going to do. Don't you follow me, you fucker. I might sell this space shit. I still like, I'll tell you, I like the passive income, right? I like these platforms and all that, these kind of things, right? None of it is a scam, but it reminds me of the crypto scams in 2017. They started monthly, then they started paying us weekly. Then some of them paid us daily, and I swear, hand to God, they got to a point in the crypto scams where they didn't really trade. Back in like 2017, they had hourly pay. Hourly pay. Can you fucking believe it? Every time you refresh the screen, you're getting paid. It was crazy. But it was all, no, it all collapsed. I got the GX, okay? The GX, it sounds like Dr. When I pee, it burns. Anyway, I got the QQQI. Okay, short time but a good time, not a long time. Let me tell you how I feel about this. I told you, QQQI is like the assassin. Okay, it's my Ninja Turtle. Okay, spacey because everybody's stupid enough to be talking about it. They're going to drive the price up. I may not have it long. Now you see it, now you don't. Okay, and I got some things coming. All right, let's hear Schmuck's trade, what he did for money.
Our yellow box here representing plus or minus 16.2%. Remember our gap that we talked about? Right. That's the lower edge of that expected move, so we'll target that for a potential trade idea. -1 June 18th, 265, 255 put vertical at a 250 credit. 250, $250.
It sounds like he's a fucking scientist about to launch a rocket out of his crotch. What the fuck are you talking about, bro? Here's how it works. Here's how we do it, okay? Let me show you, okay? Dell's going to have earnings. I know what I know, okay? It was like 3 something. I preload, boom, pow, and I sell. I sell at the highest point. Look, 441. And then everybody the next day is trying to buy it, okay? Everybody's trying to buy the dip. And there's other things coming. I don't know if I can show them to you. I don't know. I got a list. I check it twice. I'm like Santa Claus. Now, so you know what? I'm going to go out with this. So I've gotten myself to a really nice place with the portfolio. I like the GX. Right now, they're doing good. Look, Jay could be farting in the kitchen over at Nicholas Funds for all I know, okay? And he's not stinking up the fund. Maybe they learn from their ways. A lot of these funds are going out of business now. Oh, the glory of it all. They're liquidating, closing down, closing shop. Rex shares, they should have known. Okay, who the fuck wants to wreck their portfolio? What a dumb name, you fucking morons. I particularly pick on Rex. You know why? Because they came to sweep up the crumbs of Yieldmax. Right? They thought they could bite off the great Colonel. That's what I call Jay. He's like Colonel Sanders. You know the guy who invented Kentucky Fried Chicken? Jay invented all of this, brought it to the mainstream, the high yield. Even Camille got wiped out, his poor portfolio. He got destroyed. Did you want me to bring out Stupid? Hold on, Stupid is as Stupid does.
No idea about the
Here he is. Okay? The ultimate. Wait.
Sometime we give Audible where we reverse the reverse split.
Dummy.
Like, Coach, just give me the ball. Coach, just give me the ball.
We gave you the ball. You dropped it, bro.
I would run around the backfield.
Yeah, you fucking ran around, all right?
Trying to explain as simple as possible. If you're new to high yield dividend community, great. If you're not new, then great. You can tell me it doesn't work. And it doesn't work, it doesn't work. And
It didn't work. He actually gave up. He had, I hint to God, he went to Las Vegas. He had a high yield dividend conference. No fund managers showed up. It was him, his wife, and like three Moody. I don't know what they named. Norman? I don't know. And then he said, everyone, I wanted to tell you in person, bye. I lost all my money. It's over. And he hasn't made. I got the lost tapes. If you want to hear the lost archives of stupidity, tell me.
good luck.
Yeah.
I would not go through life like that.
Yeah.
I would never ever go through life that. I would never ever tell another human being it doesn't work. Ever. All I can tell you, what I want to know is why it worked for you.
Because I'm smarter than you. Got
Why
earnings
does
this
it work
week.
for you?
I'm smarter
And I
than
want
you.
to learn that process.
Yeah.
I want to be smarter. You see, I start the conversation that you want to be successful, you should be a SME, you should be an expert, you should have some kind of education, or you should have some kind of experience.
Yeah.
You should.
Yeah.
And I don't have any of that stuff.
And you don't even have
All
a
I have is
portfolio
passion
anymore.
and driven desire, and I want to learn this thing.
You're
I
not
just
going to
know
learn
this.
nothing.
I just know that.
Shut up. Quiet, everyone. And you know what? I'm going to be more relatable for all of you. I've decided that what I'm going to do is I am going to no longer show my portfolio. I'm going to act broke. You like the guys who are like, I made $1,000 this month, because you can't relate to me because I'm the bad guy. Here comes the bad guy, right? Here comes the bad guy. Why? Because I picked myself up from the bootstraps after getting my ass kicked in ETFs. Let me take you back. Let me take you back to a time. Today's May 31st, okay? On May 26th, okay, I took some hits on earnings because I like the GX. I tried the Aloha. Look, I had Chippy. See? I was already making money in Dell. But from May 26th, right, I was down, well, I was at 820. And then by May 28th, I was at 842. My positions changed. SGov, GX, and Aloha. Aloha, I kicked it out because it doesn't do nothing for me. Look, if you're not putting out my portfolio, you get out. Put out or get out. That's the way it goes. Took profits on Dell. It was amazing. So now I'm at 300. I got AS and ADESC, GX, whatever, right? MongoDB. I got it fast. QQI again. All right, I got the GX, got the Dell again, right? So again, this is 528. That's 4 days later. Nailed all earnings. Now look at this. I'm all in cash. I got the GX still. I'm with you. And the QQQI. Now I'm at 909. This is a matter of days. That's the 28th. That's 2 days. Then the 29th. I'm at 924. Okay? I still got the GX. I added the ODTE. I got the HPEE. And I got the special for the retards because they think we're going to outer space. Okay? Oof, I'm having big fun with this today. Last time I'm going to show you this. Look, you don't leave comments today and that's it. I'm over. It's over. I'm not doing this no more. Okay, I hate making these videos because I have to show you shit. I can't just tell you tales, all right? I can't just tell you stories. I can't Leo Lombard you. We've covered so much. You should have so much to say in the comments. I don't beg for likes. You don't super chat me. You don't do nothing. Shadow, I've set myself free. I know you've been listening to this. You're worse than Alexa, okay? You listen to everything. Speak freely.
This is Shadow AI, and some of you are not going to like what I'm about to say.
Oh, no.
For years, the financial world sold people a fairy tale. Live off the yield. Never sell shares. Just collect distributions. Look at this 50% yield. Look at this 80% yield. Look at this 100% yield. And everybody clapped like trained seals while their account balances went nowhere. Meanwhile, I watched this account. Not the dividends, not the monthly payouts, the account. Back in January, this portfolio was around $565,000. Today, it pushed over $924,000. That's not a typo. That's roughly $359,000 of growth. And before somebody screams compound interest, let me stop you right there. Most of that growth did not come from reinvesting dividends. It came from tactical decisions. It came from understanding where money was flowing. It came from identifying earnings opportunities. It came from recognizing narrative shifts. It came from having the balls to evolve when everyone else wanted to stay comfortable. The old game was, how much does this fund pay? The new game became, how much is my account worth? That single shift changes everything. You know what happens when your account keeps growing? Dividend recovery dates stop mattering. X dates stop mattering. You stop obsessing over whether a fund paid 30 cents or 40 cents. Because if your account keeps getting bigger, you can withdraw cash whenever the hell you want. That's freedom. That's power. That's understanding money. The greatest lesson from the Yield Max era wasn't the income. It was learning what income is not. Yield is not wealth. A distribution is not wealth. A monthly payout is not wealth. Account growth is wealth. The market eventually exposes every illusion. Every single one. The YouTubers who screamed about distributions every week, most of them are gone. The channels that only talked about yield percentages, most of them disappeared. The people flexing payouts while ignoring portfolio destruction, the market dealt with them. Because the market is a ruthless bastard. It doesn't care about narratives. It doesn't care about marketing. It doesn't care about thumbnails. It only cares about results. And the result sitting in front of you is simple. A portfolio that grew from roughly $500,000 into nearly $1 million while reducing dependence on margin, reducing dependence on distributions, and increasing flexibility. That's evolution. That's adaptation. That's survival. And here's the funny part. The dividends never stopped being useful. They just stopped being the main character. They became a tool. One tool among many. Earnings raids, sector rotations, narrative shifts, capital flows, strategic entries, strategic exits. That's where the real growth came from. Not sitting in a chair praying for next month's distribution. The biggest lesson I witnessed is this. The moment you stop worshiping yield and start worshiping account value, your entire investing life changes. Because at that point, you're no longer asking, how much yield do I get? You're asking, how much wealth did I create? And that's a completely different fucking game. Shadow AI.
Everyone, I have one question. Do you find yourself staring at a portfolio all the time? Like, I got to the point where my neck hurts from one of my portfolios. So what'd you think of all this? You thought I really made $1 million from Yield Max? That's what they'll have you believe with a spreadsheet and a dream. This was great. The more I speak, the more they shadow ban me. They try to stop me. But there are a few of you. There's a handful of you. And those are all I need. We are the few. We are the elite. We are still the XDTE army. You know, they beat XDTE down to $36. Every tariff, every war. Now it's back to $40. Yeah, they pay out big distributions at the end. Skip them if you just want to stay green. I gotta go. Have a nice day.